All right, guys, we are live. Thank you for joining. It is 9:30 in the morning, right on the dot. Markets just opened. It is November 15th, Friday. A lot of options expiring. Um, so thanks for joining my channel. The point of my channel is to grow your account via selling options in a slow and consistent way. It's for people that don't want to have the I'm sorry, guys. I really have to take this call. Give me 1 second. All right, guys. So we're gonna do today is we are gonna dive into each position. We're gonna see where we're at, what we're doing to fix it, what errors I've done, what mistakes I've done. What I learned from those mistakes, so you guys don't create those mistakes. And the reality is that, this is like riding a bicycle. Options is, and just when you feel you're getting the hang of it, you hit a rock, or you fall and you scrape your knee, and you got to get back up, and you got to keep riding your bicycle. And that's really the point of this channel, is to kind of everybody hold hands as we ride our bikes of options, so that way we can learn off of each other's mistakes. So let's go ahead and start with positions that are expiring today, and we'll dive into the full position. So we'll go ahead and start with our Celsius. So Celsius has had a very interesting past couple of weeks. They had pretty decent earnings. They didn't really make money, but they didn't lose money, which is always good to see. I'm still very bullish on Celsius, mainly because I drink it myself, and it's something that I've continued to drink. And I think it's extremely hard for them to fight for market share, and they're earning a lot of market share. So this is a position that I currently have. I'm running the wheel on. So if I was to go to, and let me go to my full Celsius position here. So I own, let me see what I own here. I own one $25 call for January 2017. So this is just something I've been selling calls on. I own five $22 puts for the 27th. So I'm definitely okay with that position. It's at 26, not concerned about it. As a matter of fact, this is actually a pretty decent position for it. It's paying pretty good premium. I'm actually losing money with it right now, but this will pay off great in a few couple weeks. It's basically an end of the year play. Celsius $24 put. I've got $24 puts for November 29th. So that one is a little bit more concerning, but we do have about 2 weeks left. And then we've got our $34 call, which is the one expiring today. So this one will expire worthless. And then we've got our puts, and then we've got our long buy. So I'm just selling calls along our long buy. And that Celsius call has really been one that um, I've been rolling, and I don't see where I have it. I'm looking at my tracker right now. I see the sold puts. Enphase call. This is expiring. Maybe I just never added it. Oh, wait. 25. This is not even a roll. $34 expires November 8th. But I closed it November 4th. Oh, yeah. I didn't even have it here. I'm probably gonna move Celsius to its own tab. Because right now I don't have it. This was November 7th. Call sold for November 15th at 34. And for that would be collected 25. The issue was that Celsius was trading at it was trading in the 30s at that point. And at one point I had to roll it because of how much it had ran. So that's why I was very cautious selling the call. Okay, so that's pretty much it on Celsius. Look, I think what I'm going to do with Celsius is I'm going to create 20. Obviously, 24 is our main trigger point, so we got to make sure we're above 24. I think if it goes below 25, I'd like to know. If it goes below 25, I'd like to know. But if it also goes above 27, I'd like to know. And if it goes below 24.50, I'd really like to know. So we're kind of just keeping an eye on this position. Crocs. So I've been playing around with Crocs. Look, I think Crocs is a strong company. They have strong cash flow and they have a strong user base. It's one of those products that you don't even call those shoes anymore. You call them Crocs. You know what I mean? It's like Kleenex. It's like those companies that the branding supersedes the item itself. And for that reason, I really like the fact that, it tumbled from pretty high place. They had acquired a brand called Hey Dude, and apparently it's not doing too well. But you can see here that we were at highs of 160s, and then it went down from 138 to where it is now. So I have a few positions on Crocs. I have a 104 call that I sold against the 105 call that I bought for March. So this position, I'm just really selling calls against it. I am surprised that Crocs. Where is Crocs? Oh, right here. Okay. So I'm not really concerned. It seems to be holding its ground there. Pretty much, I'm just keeping an eye on this. The computer is very slow today. Rocket Lab. So I had a little luck with Rocket Lab. I had bought some call options on the company for earnings, and it went up like 40%. So I sold 2 of them for a nice profit. Actually, I can tell you exactly what it was. If I go to Rocket Lab here, so I bought 5 calls for $89, and I sold them for $400. So I sold 2 of them for $400. So I made about $650 profit, and then I exercised the other 3 to essentially let me own them at $15.50 plus what I paid for them, which is 89 cents. So that's why it shows you my break even is $16.39. Okay, so I own 300 shares at $16.39. Right now, we're still profitable. Luckily, we're still squeezing a profit. Now, what I did do is I sold $22 calls for today. So these are going to be part of the ones expiring. I had previously sold these $15 calls just based on the $10 calls that I had bought. So, truthfully, I'm looking at my break even here because these are ones that I'm going to go ahead and here I'm going to show you guys this so you guys can see it. So the purples is the calls that I bought, right? So I don't like to mistake it. I have a kind of like a color code so I can see exactly what my exposure in. But I am going to create a little box here because you can see the X here that I rolled it, right? And so what I would like to know is my break even on this trade is 138. So after 138, I can actually break even and it makes sense to close out. So right now, obviously it doesn't because it's worth 303. So if I was to close it at 303, it'd be an $85 profit. But remember, we said we need 125, right? So it would still be a loss of 165. So this is very early still to close it out. I would like to close it out and sell it at a higher position, but right now, I'm not too sure about what Rocket Lab is going to do. So, because look, I got an average of 194 for these, and they're worth 310. Because I could close them at 305, but then that's going to make my. If I close them at 305, that means I have to pay 610, which is going to add me to a $222 loss, which is going to increase 472 based on my past roll. It's a $500 loss. It doesn't really make sense for me to do that. So I may even just let this stay at 15 and then just keep rolling it until I just let it go. Honestly, I'm not. It's like it's a little hedge, to be quite frank. It's a little hedge. And then come January, I may execute these. So that position's moving along. Rocket Lab, let's go to Celsius. Okay, we're back. That was very weird. All right, let's go to HIMS. So let's continue the. Yeah, I've got a little cat right here. His name's Lazar. Watch it. Watch it. Say hi. zoned out with the lizards outside. All right, let's go to Hims. So Hims is one that recently took a huge plunge because of Amazon introducing a competitive business, which provides an amazing opportunity to own more shares. Now, my cost basis is absolutely incredible. I am gonna celebrate that, and I bought those October 3rd, so it's not like this was years ago, but I was able to snag some shares at 16. I think under 20 is an amazing price for Hims. I think it's a great company with great branding, and they have a pretty niche product that they've been able to get. I have $20 puts, so they are underwater right now. They expired December 6th, so I am not concerned about it. But look, just so you can full transparency, I'm down close to $4,000 on this trade. I collected about $60, but it's about $233 what's worth. That's what each contract is worth right now. Look, the reality is I'm not concerned about it at all. It is at 20 right now, so even if the stock stays where it is currently until December, these are going to be worth maybe 150 cents, 20 cents. Right now, they would be worth about 5 cents, at which point I would close them out. So, look, I'm not exactly concerned about them. I wish I would have gotten more premium. Yeah, that hurts, but you can't win them all, right? So I am going to add a alarm here to just tell me when it is below. Here, let me do this. So first thing I'm going to do is, look, if it goes below, we're looking at the 3-month chart right now, right? So there's a pretty big resistance right here at this little dip where it bounced off of. And that's really going to be our trigger point. So I'm going to put 19. That if it goes below $19, I need to know what's going on, right? But at the same time, if it goes above $20.50, we can feel pretty comfortable about it too. So that's where we're going to leave it right now. Hinge is one that we've made a lot of money on. If I was even to look at my adjusted basis, we made about $1,500 selling put on Hims. So really, our adjusted cost basis on those 100 shares is about $1.52. So we're almost to the point where, those are worth zero, which is a great position to be in. If it dips below 19, I may buy 100 more shares. Actually, let's dive into Intuit. So Intuit has been a very interesting one because Intuit just ran the past couple weeks to like 710, which caused a lot of pressure on my calls that were underwater. 660s, 640s. What I should have done is, and now 690s. So these obviously lost a lot of worth, if you will, because we're so close to the expiration date and it's now below the strike that it's going to be losing a lot of money. So what we need to do here is keeping an eye on it. I think we have earnings coming up. That's part of and I think, look, if earnings tank, I'm perfectly fine with it. I'm okay if these long calls go to zero as long as my short calls are not pressured. That's my only concern. So we have earnings on November 21st. So in about a week, we have earnings. And the earnings is really going to be what's going to tell us. Intuit price target raised to $800 from $740 at Barclays. So it's one of those things that I'm just kind of monitoring. If we see another surge, so if this goes up to 700 again, I'm going to roll my long calls out to just buy me more time and keep rolling these calls out. That's really the goal, is to just keep rolling them out. Just having tracked Intuit for a while now, I wouldn't be particularly surprised if this thing goes down to 650, 640 after earnings. At which point would allow us to close these calls out for a profit and sell our calls and then just conclude the position. you know. Luckily, we started winding it down, so it's only 3 calls that we're kind of in this pickle with, not 10 or 5. But these last little bits is really where you kind of have to finish properly, and you know, if your car rolling, it's not good because now you're running out of your long wick. So this is just something I've learned with doing the poor man's covered call. You know, if I was to summarize the 3 main things, if you're going to be doing a poor man's covered call campaign, is number one, make sure you buy them in the money, and make sure you buy them far out. You know, at least a year, because then that means that the theta decay on them is very slow, which allows you to really capture that premium in the beginning. Number two is make sure you have an exit plan. You know, if you have a goal of making 50% return on your poor man covered call campaign, once you get to that point, just sell them or reduce your position substantially if you want to just keep wheeling at a zero cost basis, you know. And then number three is if you're below the strike, make sure you sell calls with caution. You know, that's why it's important to buy the calls in the money, because 690 to 660, if I was to let these get assigned, I'm the one that's eating that loss from 660 to 690. That's really the worry here. Because then you know, so that is something to keep in mind. If you're selling calls below the strike, make sure that you are cautious about it. You know, these 660s right now are worth, they went up $1,800. We're worth about 42.85. There's still a lot of time left on these, so I'm going to let these kind of run. But the reality is that I'm going to see what happens here with Intuit, because if it moves below 680, I got to know it went below 690. If it goes above 700, perfect. All right, next. So that's the position with Intuit, and that's the poor man's covered call. CleanSpark got a beautiful run up again. Believe it or not, we actually were in the 16, 17s. Now, I've always said I've been trying to reduce this position. I did have a chance to sell 100 shares at 1638. What's it at right now? 13. Yeah, so we got a pretty decent exit on 100 shares. Now I got to just keep timing that exit on the remaining shares, but I've got them with calls. So here's what's going to happen. This $13 call, more likely, I'm just going to get assigned. These $13 puts would be ideal because these would print if my 13 gets assigned. This $14 call, I hope gets assigned. And then this $15 call, I would also be okay. So honestly, this whole position is for sale. And I would like for this to be at 15, so that way everything here just expires worthless at December 20th. That's going to be my little gift. And then it'll just spit out, you know, whatever the market value is, spit me out back my 6, 7 Gs, and then call it a day. Not concerned about CleanSpark. Given where Bitcoin is, I think a lot of these miners are undervalued right now. So, because remember, it's like if you make gold, if you're a gold making factory, and the price of gold shoots through the roof, that's like your product just becoming a lot more expensive and allowing you to sell it for more. So why wouldn't that be a positive or a bullish wave on the stock? So we have Celsius, CleanSpark. We talked about Intuit, Riot. So Riot is the same story. I was able to snag. So Riot's been an interesting one for us because I've been able to generate close to $5,000 just selling puts, and I finally bought my first 100 shares November 4th. So about 2 weeks ago. Imagine I was able to snag some at 9. It's almost at $12, right? So I have two $10 puts that I'm okay with. These are for December 20th, and then I have a $12 call for January 12th, which right now is out of the money, but I would be okay with selling them at 12. You know, we acquired them at 9.15, selling them at 12. That's $285 profit. 285 on my 915 cost basis. You're talking 31% return. So I'm not concerned. It's a good one. Good trade. Now what I do want to do is I want to set up a little. I'm sorry, guys. This is kind of crazy. This internet today. We'll get through it. We'll get through it. What I do want to do is, right, just so we can keep an eye on it. TSLL is up. Hims, Walmart, Tesla calls. Okay. Sometimes I get so many notifications from Robinhood that these notifications are pointless, All right, Clean Spark, Intuit, Riot. Let's go to, where were we? We were at Riot. All right, so we go to Riot, and I'm going to, so right now we said we have $10 puts and then a $12 call. So what I'm going to do here is if it goes below $11, I'd like to know, but if it's also above $12, I'd like to know, because then we know we're in the clear. All right, so that's the position with Riot. Now let's move on to what else we have going on. We have Rocket Lab. Rocket Lab. I think we talked about Rocket Lab. Yeah, we did. Rocket Lab was one of the first ones we talked about. SQQQ. This is a small hedge that I have here. Tesla $200 call. 205 calls. I'm just gonna keep rolling these out. After this year, I'll probably roll them out for another just a year till December 2025. Get $40, $50 in share appreciation. Celsius $22 put. We talked about Celsius. Costco, I think, is one that's dragging on me right now. Oh, 914. Yeah, I had bought 2 calls for 43, and I'm down 50% on those now. So, with Costco, I think they have their earnings December 12th. So we still have about a month left, and I am selling calls. What strikes are these again? 950s. So I'm selling calls against these to just try to generate some income, but it just hasn't been green for me to do that. So I'd like to be notified if this thing goes to 924, seems to be our green. But if it goes below 910, then I need to know. Or 905. Okay. So, and then on Costco, we actually had sold 2 calls that brought us in Oh, and I actually sold those, so I don't know why those are still showing here. Oh, they're still active. No, I sold those calls. So I bought back the 990 November 12th, and I bought it back for 105. November 12th, and I bought this back for 105. So that is 105 times 1, yeah. So that's a profit of 300. And then the 1005, I sold it for 60. Same thing, but I sold it for 60. So look, we brought in close to $500, but obviously this is a far larger loss that we have with Costco. So I'm just gonna continue selling calls on it. I'm trying to see let's see what premiums look like on it. Oh, very nice. 950, 155. That's for November 22nd, so that's 2 weeks before. I mean, look, let's just let it run, see what happens. Um, Crocs. Okay. Now let's talk about Enphase. Enphase has actually gone green, which is a surprise to me. And we have two credit spreads on this. So this is essentially just this put credit spread is essentially just me selling a put, but paying a little bit of money to make sure I don't require all this collateral. That's pretty much what this is. Do I want to get out of this trade? I probably do. I'm not a big fan of Enphase, but we're so close to cracking a profit on these that I'm probably just gonna hold on to these a little bit more. We're $200 away. Um, these are for January too, so I'm not extremely concerned. February. Okay. What else? Hims, $25 call. Riots, Rocket Labs, SoFi. I'm probably gonna let go of these January 17th. TSLL. Let's talk about TSLL because I have a position with TSLL which I want to eliminate, but I have some calls on here. I have $20 calls, which these are probably going to be okay. I have $15 calls, 10 of them. Oh, these are puts. Okay. Yeah, I'll let go of all of them. My biggest concern is really Intuit. That's the one that I really need to figure out. And more than likely, what I'm going to do is, well, first I'm going to see what happens because this thing could correct another 3-4% and go down to 670, 660, at which point, I'd like to at least close these 660s, right? So the 660s, my break even on those is about 854. So there has to be $854 left of premium on these. And they're worth about 4,000. So there's still a lot of way to go. We'll see. We'll see what happens. But look, guys, that's pretty much it. We're nearing up on 36 minutes. I try to do these in 30 minutes. If you have any questions, feel free to let me know. There's definitely some good buying opportunities, especially with HIMS. I think under 20 HIMS is excellent. If Rye gets under 10, definitely buy some. CleanSpark. CleanSpark is just, I just don't get CleanSpark, to be honest. But that's pretty much it, guys. So good luck to all. Any questions, DM me. Have a great day.